In today's video, I am going to be breaking down different ETFs that pay every single month, and a lot of these are very, very good. Some of these may be on the American stock market, while others are on the Canadian stock market, so let's get down. Let's check these out. If you want some passive income, this is definitely the way to do it. So this first ETF is XYLG, and there is a very good reason why I picked this ETF. For one, the volume is kind of low, so that can be a negative if you're not going to be investing for the long haul, or if you're looking to be able to buy a lot of shares at once. This is not the ETF that I would be looking at this time. The yield is substantial, even though it says NA here. It's sitting roughly around 7%. What I do like, however, is the the upwards trajectory. However, there has been some fall off recently, mainly because, of course, the market recently hasn't been doing very well. However, it has broke through that downwards trend recently, which is, of course, very good. We can also zoom in into the MACD, and they are about to cross, which means that this could start going higher. It does pay every single month, and it's actually a substantial dividend too, and it's actually higher than it was at this time a year ago, which is fantastic. This is actually probably the biggest reason why it's gone down recently. It's heavy on stocks or tech stocks, mainly because it is covering the S&P 500. So we have to keep that in mind. The S&P 500 is very tech heavy right now. And all of these companies are very solid, my favorite being Tesla and Apple. Next is the Horizons Enhanced Income US Equity. This one's in US dollars, just so you know. And it's currently sitting at $19 per share at the time of recording this video. Its ticker symbol is HEA, and its average volume is very, very low. So if you're looking to buy maybe 1,000 shares of this, which would cost you around $19,000 at this point in time, you may have a little bit of an issue trying to get into it. However, again, recently has done extremely well. Has also not done very well over the last couple of months, but neither has the stock market in the States. If we look before everything here, this actually had a slow increase throughout that time. And that is what I'm currently looking at when it comes to stocks. Even though this looks nice, I am now resorting to what's happened before the virus, mainly because that will tell us potentially how the company was doing before just everything was going up. And I really like to look year over year on the numbers, and yes, it has increased its dividend, which is fantastic. That's what you want to see. The third ETF is BTCY. It's a Bitcoin yield ETF. So basically it holds Bitcoin, but it's going to be selling covered calls against those Bitcoins. So it's covered call Bitcoin options. Anyways, all of these ETFs that I'm mentioning today are covered call. Basically what that means is it'll hold the individual stock, but it will sell covered calls against it. And depending on the ETF, some are lower on the 15 to 20% covered call side, while others, like some of these purpose ETFs, will be higher at the 30 to 35% range. Usually when it comes to the 30 to 35% covered call range, if there is a higher chance of growth, then at that point, that will be substantially limited. However, when we're looking at, for example, this one, which is Bitcoin, there is a huge potential for growth, but also a huge potential for loss, and this can protect you from the downside. Its average volume is actually quite a bit higher than the other ETFs I've mentioned so far at 26,000. So of course, if you're looking to buy like 10,000 shares of this, which would be like $76,000, then at that point, you would be at basically looking at a higher chance of not getting in all at once or even in the same day. It really depends on where your buying limit is. That's the historical price of Bitcoin. It's currently broke through its recent highs that it could not get past. However, it has broken through that, and it's going to be very interesting to see where Bitcoin is going to go. Currently, at the time of recording this video, however, it is paying a very high yield. We're going to say yield. It's not technically a dividend because of the way it's taxed, because it's covered calls, it's capital gains. However, still very interesting, very high management fee. Other covered calls are generally around 0.7, like the ones I've mentioned so far. This one is about 35% covered calls, so keep that in mind too. They're all around 3 months out, so you're going to be able to see where this travels quite often, quite easily. It's still new, so it's hard to see where the dividend's going to go, but this is what it's been paying every month so far. Next is ZWH, and this one is a good ETF in my own opinion because it's had a very good history of growth, and not many covered calls do have a history of growth. This one pays around 6% and has a lot higher volume at 42,000 shares traded at 7% MER as well. What I like to look at is, of course, where it's gone before this whole issue right here. However, I do like the fact that it has recovered. It's got past those highs that it had before the pandemic, and of course, it's currently having a little bit of issues, just like the whole entire market too. It generally pays the same dividend for a long time, and the last time they've raised their dividend was back in 2019. Its top holdings are the top companies in the United States that pay dividends, and that is a good way to go. Right now, especially because of interest rates rising, banks will be doing extremely well, and of course, there is a bank on this list. So, of course, we're looking at Microsoft, we're looking at tech, oil's doing extremely well right now. Coca-Cola generally does well no matter what. Home Depot, if houses continue to get built or renovations continue to happen, Home Depot is going to do extremely well too. This is my favorite right now, mainly because of higher interest rates and money printing. Anytime there's money being printed, banks benefit. Anytime that interest rates rise, banks also benefit. So right now we have the best earnings times for banks. They have a high, or this one has a high MER, however, high average volume too to get in and out, and it's around 7% dividends that pay every single month. This was not around long before the virus, however, it was going up in value before the virus. Of course, it tanked, and then it has recovered slightly, or mostly. However, just like everything else, it has dipped, just, of course, like the entire market. Russia's not being very nice to us people who like to invest. However, technically, this is a fantastic buying opportunity, potentially as long as there's no world war. They have recently lowered their dividend, but I've been reading a lot about the reason why, and that is because there's less volatility, or at least a little bit less volatility back when that happened, which could be why. And these are the top banks that it holds. I would not be too surprised if TD jumped in there eventually over the next little while, because of course TD with its recent purchase could be one of the largest banks in the United States, as well as in Canada. So those are my thoughts on some different ETFs that pay every single month. I hope that you've enjoyed today's video. If you have, hit that like button, subscribe. Make sure to go check out that video over there as well as this video over here or wherever those things are, and I'll see you guys again next time.